Gold, precious metal, store of value, hedge against inflation. Why gold though? Gold's material usage is limited in industrial settings, and why, even today, when the US dollar isn't linked to precious metals, do many investors flock to gold during economic downturns? I'm admittedly no expert when it comes to gold, but thankfully there are two legendary investors that have quite strong opinions on the matter. Warren Buffett, chairman and CEO of Berkshire Hathaway and one of the richest men in the world, and Ray Dalio, the founder of the largest hedge fund in the world, Bridgewater Associates. Sadly, we couldn't get Ray Dalio or Warren Buffett in the studio for an interview, but as an alternative, we'd like to give you the key views that Buffett and Dalio hold. First, let's take a look at Buffett's view.
Yeah, we're not enthused about gold.
Buffett calls gold a hunk of yellow metal. His take is that because gold is a non-productive asset, there is no good case to hold it over a productive asset like equities or real estate. He often uses the example of an investment in farmland.
If you buy 100 acres of farmland, it will produce for you every year. You can use that money to buy more farmland. You can do all kinds of things. For 100 years, it'll produce things for you, and you still have 100 acres of farmland at the end of the 100 years.
Bonds, stocks, farmland all generate income. And over the long term, this income can be reinvested into those assets. The benefit of income generating assets is that you get returns on your returns. And in 100 years, you still have the farmland or the company stock. Gold doesn't do that. It sits underground in a vault. And as an extremely long-term investor, Buffett's focus is on generating income that can compound over time. Ray Dalio has a view to the contrary. What's the case for buying gold?
Gold is a currency. So we have dollars, we have euros, we have yen, and we have gold.
Dalio makes the bold claim that if you don't own gold, you know neither history nor economics. Since ancient Rome, gold has been a store of value. Historically, gold has tended to perform well in economic downturns. People often flock to gold when times of struggle come. Bear with me as I get a little economic-y here, but here's why. When countries go into recession, currencies may devalue. Often, central banks seek to reduce their interest rates to help stimulate more borrowing and spending during these times. They do this through expansionary monetary policy. That's just financial jargon for printing more money to inject into the economy. Greater supply of money usually leads to currency devaluation. This is where gold becomes precious, because central banks can't really create more of it. Gold has a limited supply. While the value of the US dollar has lost purchasing power over time, gold has tended to hold its purchasing power over long periods of time. Have a look at this graph. Historically, gold has tended to rise when the US dollar has weakened in value. That is, all else being equal, there is a negative correlation between gold and the US dollar. Because of these characteristics, gold is often viewed as a safe haven asset. While not a foolproof form of protection, gold can be used as a hedge against uncertainty within investors' portfolios. So, who wins the fight between Buffett and Dalio? There's not a single correct answer. If you're an investor looking for income and the ability to reinvest that income, you're probably not going to have a huge use case for gold. But if you're an investor looking to hold an asset which historically has had a low correlation to other major asset classes, or an investor worried about recession and decline in the real value of your currency, gold could be a useful addition to your portfolio. And that's the way investing works sometimes. Different investments have different use cases at different times. At Betashares, we offer a number of ETFs that can be used by investors with different goals and investment philosophies. We even offer a gold ETF that is backed by physical gold bullion, locked away safely in a vault. Unlike physical gold, you can get access to this exposure on the ASX by looking up the ticker code QAU. You can find out more about QAU and our other funds on our website here. Thanks for watching this video. Please like and subscribe, and we'll see you in the next one.